Happy Friday, traders. Today, we are going to break down a little bit of my trading from Asia. I know a lot of people just maybe don't have the right idea on how they should be approaching Asia, but real quick, I'm going to just run you through some trades that I took last night and hopefully you can get some value out of that. So let's just hop over to TradeZella. Let's see what we're looking at. So just a couple trades, right? But what we're going to be mainly concerned with is going to be just these ones right here in Asia. So what we want to do is we want to basically just determine what was the rhyme or reason, right? Is there any sort of validity to these setups? Is this something that could fit your system or not? Well, let's see if it makes sense to you. So looking at the chart, what I saw basically was this. It's a real simple trade idea. Get these charts cleaned up a little bit. I had saw that we were potentially holding this gap right here. There was like a 30-second in this area. You also had VWAP that was aligned pretty well with that area. So whenever I see those two, especially in Asia on this opening drive, that's a good trade I like. I just had the misfortune of essentially getting stopped out at the low. You know, if we want to evaluate that, that's pretty impressive. What had happened was my stop was right here, and it goes, right? It dips, and it stabs lower as I trailed it. I thought we were good right here. I thought we were good. I was wrong. So I took a stop there. No big deal. I was hoping that this would actually not sweep this low because I did have a limit order up here to get long 5 more. So I would have taken 5 on the front side, 5 on the back side, and then I was targeting obviously a new high. So my targets were up here. However, that's just not how this trade went. But I did not let this early stop discourage me. I simply waited. And in this case, it was just a couple more, I guess, minutes really. But I decided to take another entry because I don't think the trade was invalidated. It was just management, right? So what had happened, got stopped out at the lows, which is fine. You know, you size accordingly, you manage your risk, and you go from there. This was the next trade. Mind you, all of these things are going to be the same idea. I think if you're taking multiple executions, your bias should not flip. It shouldn't be flipping back and forth. That means something was wrong with your analysis. Same thesis. Pullback, VWAP, fair value gap. This one, obviously, by this time, fits in there a little cleaner. And then I buy this break of this down closed candle. Very simple framework. Targeting up here, specifically into, this area right here was pretty nice. I like this up here as well. And then eventually the swing high would be broken, just not inside of my context. I was aiming for this and then this, which is ultimately what you're going to see on this next execution. So why did I trail out of this trade so early? Simple answer. When you're trading Asia, there is one specific tendency I want you to remember more than anything else. It's the fact that in Asia, there is this tendency that price will want to pull back and completely delete a gap. It doesn't want to normally respect and hold all nice higher lows. It will be very jagged where it pushes and then it dumps on you completely, sweeps out any potential buyers that are still in the market, and then it'll run. Not very fun. So how I combat that and how I mitigate that essentially unrealized profit loss is by trailing tight. I keep it simple. So I took a partial here, and then you can see right below that body is where I got trailed out. That's why this on TradeZella, it's really crucial that you use these execution arrows over in your settings right here. Because if you're not using your execution arrows, you have no idea what price you're buying. And that's all we're trading. So you can see I legitimately am buying above there. I target one in here, which is, right here. And then I get trailed out right below the bottom of that body. Interesting, right? When you can see the prices of a trade, it actually changes your perception of what you did or what's going on overall. So that's something I want you guys to keep in mind. If you are trying to scalp these smaller structures, you need to be very aware of where you're buying. Be mindful. Don't buy the tip of a candle. Buy at a good location. Buy at a structural risk point. Don't just chase into a move and not even notice because you have the little execution arrow and it shows it like this on top of your candle and you're legitimately buying right there. You'd want to be buying down there. Price advantage is everything. Think about how that's going to add up over the course of your trading career. You'll leave a lot of money on the table by doing so. Hop into our last trade right here. Same idea. I want you to see it's been the same structure all day. We are looking here and we see that this had pushed higher, right? We were unsure if it was going to hold this gap and it held. And it gave you that push higher, took some off at the local high, and then I trailed out below that candle low. Similar system, right? In this scenario, I was able to net 20 points, but I could obviously aim for more. However, if you look at the risk reward, why would I need to? That was a tremendous risk reward. 5R is more than you need. And the reason I was able to do that is because my entry was right here. So remember, I get stopped out right here, 3 candles go lower, and then I can re-enter right there because I see what it's doing. Dip, 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 and I enter right there, and I can put my stop right at the low. Crazy, right? That's the beauty of having these frameworks in mind, because if I'm in here and I'm trying to hold this and I have my stop down here because I just don't want to get wicked out, get wicked out. Actually, you know what? Get out before it even wicks. Why not? Why not get out before it wicks? Get out up here, let it dip, and then you buy the right side of the V. The problem with the majority of traders is they spend most of their career obsessing about catching a falling knife. Instead, if they just focused on getting on the right side of the V, that's as simple as it is. Find that level that you want and wait for price to validate it. You don't get extra points for being the first one in the trade. I say this all the time on stream. And if you're not familiar with the stream, I have info down in my description. Check it out. Join our free Discord. I stream multiple times a week. I do stuff pre-market. Hit us up. See what we're about. But like I said, what I say on stream all the time is very simple. You don't get paid for being first. If being first or being early in a trade got you paid, that's like the easiest trade in the world. I would never bother entering on a location. It's all about location, and it's all about the structural context at a location. So quick one, if you got something from today's video, please share it with a friend. Leave a like, give me a comment, suggestion, whatever you got. But, happy Friday, take care, and we'll be back next week.